Hey everyone, thanks for joining our home buyer webinar. This is Ben with Keller Williams Philly Living. I'm here with Steve with Center City Mortgage. We understand it was pretty cold the other day for our happy hour and that you probably were a little hesitant to come on out and bear that weather. So we wanted to make sure you still have the opportunity to sit somewhere warm and learn about the process you're hopefully about to get into. So let's start off with just a couple of basic things. One, why should you watch this? Well, should you watch this? And should you decide to use Center City Mortgage or myself as a realtor, we're going to offer you a couple goodies. One from Center City Mortgage is a appraisal credit up to $450. This is going to enable you to essentially bring $450 less to the closing table. They're also offering you a one-year home warranty, and I'll be providing a $250 Lowe's gift card. This will enable you to get good appliances and all that great stuff.
Yeah, we also have a discount program that gives you discounts on furniture, appliances, moving services. There's more than 25 national retailers on that discount program. It's free to you. It lasts for a year, and it really helps stretch your dollar a little further that first year of home ownership.
And it looks like my laptop's playing games with me, but if you can see here at the bottom, this is saying if you do use Center City Mortgage and myself for these features. Let's just go into a couple of key terms we're going to be talking about today, some things you're going to hear you might not be familiar with. This one you've probably heard, goes by seller assist or seller concession. Steve, what's a seller assist? Why should anyone care?
So essentially, it's, you as a home buyer, first-time home buyer, may not have a lot of money out of pocket to be able to buy your first home. This is a way for the seller to help you with your out-of-pocket costs. So that you have a limited amount to be able to bring. You'll see that in some of these programs. You don't have to know a whole heck of a lot about it, except for it's available to be able to lower your out-of-pocket.
It is a tool that we can use as realtors sometimes to make sure that you're getting the home you want at an affordable rate, and also trying to ease that burden on the other end of the closing table. A couple other key terms we're going to hear about is debt to income. Compared to your mortgage insurance, which is something that you may wind up having to pay over the life of your loan. Maybe not. Of course, we're going to talk about your credit score, loan to value, which is of course talking in reference to appraisal, which is essentially how much are you being lent from the bank versus how much is the home worth. And then I'll talk a little bit about inspections. But that last one here is why we're really here today, the pre-qualification. I meet with a lot of home buyers who are on Zillow. They want to get out there and check out houses as soon as possible. But honestly, that's kind of putting the cart before the horse. What we need to do first is get a real understanding of your finances. What can you afford? What do you comfortably want to afford? What's it going to cost you over the life of the loan? And there are different types of loan programs we're going to get into right now that really may speak to you in your particular situation. So let's go ahead and get it kicked off.
Yeah, so this is Steve Grandizio from Center City Mortgage. We're going to go through some of these loan programs. Do not feel like you have to be an expert in any of these. We just, at a high level, want to highlight some of the different programs that are out there for people that may not have a lot of money to be able to take out of their pocket right now. Back in the day, 30, 40, 50 years ago, people had to have 20% to put down in order to buy a home. That's not the case anymore. In fact, it's very rare, especially for first-time buyers, to have 20%, especially at today's sale prices.
Yeah, in my 2.5, almost 3-year career, I've had one client put down 20%.
That's great. So again, you don't have to be experts. Again, apologize for some of these slides. They bleed a little bit, but hopefully you'll get the gist. So a lot of people, you've heard the FHA, that stands for Federal Housing Authority. It's a program to be able to limit your out-of-pocket. It's a government-sponsored program, and it allows for borrowers with not the greatest credit to be able to still buy a home with very little out-of-pocket. It only requires 3.5% down. So I always use the example of a $100,000 purchase. Makes it easy math for all of us. That's $3,500 down. So we'll lend you 96.5% financing. That's $96,500 on a $100,000 purchase. There is an extra cost that's pretty unique to this program. It's called the Upfront Mortgage Insurance Premium, or MIP, and that's calculated by multiplying 1.75% times the loan amount. So in that $100,000 example, it's $1,750 of extra closing costs that you wouldn't ordinarily see on some other loans. And that helps fund this program. There's also an annual mortgage insurance premium, so you're going to pay that in the form of your monthly mortgage payments. You'll see that, and again, you don't have to know too much about it, but there's an extra payment in your monthly mortgage that's called mortgage insurance premium. This particular program allows the maximum seller concession or seller assist that Ben was talking about earlier. They allow 6%, so on a $100,000 purchase price, they allow a $6,000 seller concession to help limit your out-of-pocket cost.
This is probably the most popular loan program that I deal with on a daily basis with my clients. And the big reason is with the seller concession. Being able to reduce your cash needs at the table is often fairly important. It's often probably the most important thing for a lot of people. And there are some strategies to using the seller assist. You can make your offers contingent upon it right up front. You may not use the full 6%. You may want to hold back a little bit following some inspections and use that as leverage and negotiation. That's something I'm glad to talk about offline. I just want to let you know that this is a tool and it can be extremely helpful.
Yeah, absolutely. And as you can see, FICO score is down to 620. There's some banks out there that have what are called overlays. They may only go down to 640. Center City Mortgage, CCMI, will go down to 600 FICO score. So you may have a couple little dings in your credit, something in the past that's keeping your credit score down. It doesn't necessarily prohibit you from using this FHA program. We talked about a little bit about debt to income ratio and the key terms, but debt to income ratio is the percentage of your gross monthly income versus your minimum monthly debt payments. So your car payment, whatever your minimum is on your credit cards, and the new mortgage payment can exceed 50% of your gross monthly income. So if you're making $24,000 a year, that's as your gross, you're making $2,000 a month. So we want all of your debts to be $1,000 a month. Again, just to make the math easy. And we'll calculate that when we speak with you if you guys want to get what Ben talked about earlier, pre-qualification. That process typically only takes about 15 minutes on the phone.
Just give us a call, go through the questions. You'll have more information at the end.
And the max loan amount, this is good to know, in Philadelphia County is $402,500. So it's a pretty significant amount. There's a ton of houses, first-time homebuyer type houses, that fall under that loan amount. The next program, you may have heard the term conventional or conforming. Well, conventional and conforming are referred to these governmental agencies, Fannie Mae and Freddie Mac, and they have home programs like this Home Ready program. And so this is a conventional loan. It requires 3% down, so a little less than the FHA, but we typically want borrowers in this program to have a little higher FICO score, credit score. Even though we go down to 620, the rates get a little worse as you go down in credit score. So typically if we can get a borrower in the 680, 700 range, this is a really attractive feature for them because their mortgage insurance premium is typically reduced. It's usually a lower percentage, even though they have that monthly payment. It's typically lower than the FHA if you have a higher credit score. It does only allow a 3% seller concession. So again, in that $100,000 scenario, it'll allow a $3,000 seller concession or seller assist. Similar to the FHA, we can go up to 50% debt to income ratio. And the max loan amount on this one just got raised January 1st, $484,350 in Philadelphia County. So if you're buying outside the counties, ask Ben, ask us, and we'll let you know outside of Philadelphia County, Montgomery or Delaware County or South Jersey. If you're buying anywhere else in the region, we'll help you out with where those numbers
Just
fall.
so you know, average home price in Center City here in Philadelphia, probably somewhere around $300,000. As you get outside of Center City, drops to about $150,000.
So there's a neat program specific to Pennsylvania. It's called the PHFA program, and it's a lot of the same requirements and same features as the FHA program. So I'm not going to go line item by line item here. Couple differences. One is they do a $6,000 down payment assistance. assistance. It's an interest-free loan program, so you don't have a payment on it, but it's $6,000 to be able to limit your out-of-pocket. Huge, huge, huge feature. Same upfront and annual mortgage insurance premiums as the FHA program. Same seller concession of 6%. Really the same FICO score. One thing we do allow with the PHFA program is non-traditional credit. So somebody, maybe they don't have a credit score. They haven't had credit cards or a car payment or anything, but they've had utility bills, cell phones, rent payments. We can build what's called a non-traditional credit report to show that you in the past have made payments on time to people that you owed payments to.
And this is a great program. I've had several clients use it, and that $6,000 interest-free loan is huge. Just knowing that right off the bat, as you're shopping for houses and you're running these we call buyer estimates, that you can just go ahead and reduce $6,000 from that is incredibly helpful and really takes a lot of weight off your back. The other kind of interesting part here is the home buying counseling, which we haven't got to yet. But this isn't buying a car where you've taken a test and you're given a car and you're good to go. And if anything happens, you can roll into a mechanic. There is a lot to home buying and owning a home that's important to really understand before you get into that. And while it sounds like homework, and it kind of is, if it comes with a $6,000 interest-free loan, it's worth doing, that's for sure.
Yeah, and there are some income and location restrictions. We can help navigate that if you feel like this is something that you may be able to utilize. The loan amount, as you can see, goes up to $433,500, so higher than the FHA, a little lower than the conforming Fannie Mae program. Next, if you're a veteran and you have a VA benefit, then this is an amazing program. Rightfully so, right? If you served our country, you've earned it. 0% down program. That means we're giving you 100% financing. So if you're buying a house for $100,000, we're giving you a $100,000 loan. There is no mortgage insurance. So the monthly mortgage insurance is $0. There is an upfront funding fee. And as you can see, it's pretty high. It's depending on credit and some other things. It's between 2.15 and 3.3%. So it could be fairly significant, but it's a one-time fee to be able to get in here, and you're getting 100% financing. Seller concession is 4%. So in that $100,000 example, it's $4,000 seller concession. Minimum FICO score is 620. And again, we'll go up to a 50% debt to income ratio on this loan. So again, you don't have to remember all of this, but know that it's available. Know if you are a veteran that, we'll explore this option.
And Steve, if I'm correct, it's not just veterans as well. It's family and spouse. Is that correct?
Yes. Yeah. So we'll let you know when we take your application over the phone. We can, we'll ask some questions and see if you're eligible for a program like this.
Here's a cool one.
Yeah. So HGTV. A lot of people watch Chip and JoJo and Property Brothers. So you may have seen the 203K loan. A lot of the people who are doing these renovations on their homes are using products like this, and there's a couple really neat ones. So like the FHA program, we're lending 96.5%. We only require 3.5% down, but that's on the total acquisition. So again, to make math easy, let's say you're buying a house for $100,000 and it requires $100,000 worth of work. We'll finance 96.5% of the $200,000, the total acquisition cost.
So the reason this program is so much fun, in my opinion, is unique to Philadelphia's housing stock. If you get out here, you start looking at a lot of these houses, you're going to see what we call grandma houses. I'm talking shag carpet. I'm talking AstroTurf in the basements, wood paneling, all the things that you haven't seen since you were literally at your grandma's house most recently. You walk into this house and you know it's structurally sound. You know this is a great neighborhood, but you can't stand anything you're looking at in here. This program is going to allow you to tear that out, get a general contractor who's going to know how to do it right, and design you your dream home, and going to finance it for you. There's literally no better way to create your dream home than with a program like this.
Yeah, and there's some other details. Again, without going into too much detail, we do a lot of these. We know the program very well. In fact, one of my senior loan officers just completed a 203K renovation loan on his primary residence. So he knows it intimately from both sides, and he'll be able to hold your hand through the process. This is not a do-it-yourself loan. You can't take the money and do it yourself. We need to have a general contractor. There are some requirements around that, and we can get into that. There is what's called a HUD consultant most times, depending on the amount of work you're doing. And this person's there to protect you, to make sure that things are getting done to spec and to code as we move throughout the process. It is just for primary homes only, but a lot of people will buy multi-unit homes and live in one. It's a great way for a young buyer to become a homeowner and become an investor at the same time. You buy one of these, you fix, 2 of the units, you live in one on a 3-unit property, and then a year or 2 later, you go do it again.
You're probably paying someone else's rent right now. Why not have someone else pay yours?
Fannie Mae, just like before, they have their own program. They have a reno program as well. So they lend up to 95 to 97% financing. There's some factors that'll determine how high they'll go. But again, of the total acquisition cost, so the purchase price plus any renovation. We'll do primary residence 1 to 4 unit, and they do 1 unit investment home. So investors can use this program. You can also buy second homes. So if you're looking to buy a shore house or a home up in the Poconos, you can buy a second home using this program. The renovation has to be only 75% of the after repair value. So you can't buy a place for $10,000, which is not going to happen, and then put $300,000 into it, because now your renovation is way more than 75% of the total value. It's never going to happen, especially if you're buying in Philadelphia.
Yeah.
Even a shell, you're going to be paying a pretty good percentage of the total cost.
I'm happy to show anybody shells for $30,000 if they're interested.
There's no property age restriction, so it could be 200-year-old home in Philadelphia, which could be super attractive to be able to buy. Conventional PMI, just like the Fannie Mae, so private mortgage insurance, and luxury items are allowed. So if you're buying in the burbs, a swimming pool, things like that, maybe a Bobby Flay kitchen outside, those types of things that you can't do in a 203K loan, we can actually do on these types of deals. Again, you don't have to know everything, but just know that it's out there. There is a VA renovation loan. Again, similar stuff to the VA, 100%, but this is 100% of the total acquisition. So in that same scenario of buying a $100,000 house with $100,000 worth of work, we're lending $200,000. Only up to $35,000 in repair. So if it was a $100,000 house with $35,000 in repairs, we're going to lend $135,000. So it's minor remodeling, cosmetic work only, not huge overhauls. You're not buying a shell with this program. But again, fantastic program if you have the VA eligibility.
Yeah, that last one is mostly just so you love everything about the house except the bathroom, except the kitchen. This is a great option for you to take a house that you love 90% of and make that extra 10% yours.
Yeah, the paneling that Ben was talking about, those things that were awesome in the 60s and 70s. So let's talk about, we talked about some loan programs. Let's talk about what buying a home means to your wealth.
Why are you doing this? As I kind of said improperly before, you're paying rent now, which is probably someone else's mortgage. So it can be tough often for people to get out of the one-year mentality of renting, year over year. That's all you care about is your lease from one lease to another. When you're buying a home, you're not just buying a home, you're building wealth. This is something that can pass down from family members, throughout time. But let's start with year one. If you're looking at a home about to purchase for $250,000, at an FHA rate of 4.5%, which is currently about average what we're looking at right now.
Yeah, right now, absolutely.
Cool. So your loan's going to come out to about $241,000. So this is what you're looking at for year one. Now we're taking a couple of conservative estimates that your home will appreciate roughly 2% every year.
It's very conservative. Yep.
So in the city, in certain neighborhoods here, we're seeing much higher than that. But again, let's be conservative. Well, let's jump forward a year.
So 12 months later, here's where the value goes. That $250,000 house at a 2% appreciation is now worth $255,000. You've made now 12 mortgage payments. So your $241,000 loan is down to a little over $237,000, which if you look at the equity there, you now have $17,642 in equity. So you're starting to build wealth.
And this is assuming you do nothing. You move in, you spend a year in your new home, and everything's great. Say you get in there and you do a little bit of DIY work, you do rehab the kitchen, or you do rehab the bathroom. All that certainly factors in. This is strictly speaking, you moved in, you've done nothing 1 year later. Look at that equity.
So let's jump ahead to year 5. So a lot of people, they're buying their first home. They're thinking, hey, I'm going to be in here about 5 years or so. Let's look at year 5 and what that looks like. So year 5, your value, again, with a 2% appreciation, super conservative. The value is now 276, a little over 276. Your loan balance is down under $220,000. Now you have $56,000 in equity. That's the difference between the value and what you owe. That's $56,000 of additional wealth that you've built in this home.
And think again in terms of this as renting, if you are renting. I almost promise you, if you look at your lease, there's probably provision in there that says your lease, your rent monthly, your rently payment can be jumped up about 3% every year. So why not flip it the other way? Why, instead of increasing your rent every year, why don't you get something back? After just 5 years, you went from having a $250,000 loan, now you have a $219,000 loan. You have $56,000 worth of equity for yourself. Pretty awesome. Now let me go ahead and talk about my property. This is a listing that I currently have off market, and I want to use this as an example of an average, first-time home buyer house. This home is 1528 South Newkirk. It's located in Grays Ferry, which is just off of Point Breeze, which if you're here in the city, if you know anything about real estate in the past 5 years, has been absolutely exploded both in popularity and appreciation. Grays Ferry is just the next logical wave to that appreciation. So this is a very simple home. It's very typical of what you would see in South Philly. It's 3 beds, it's 1 bath, is completely move-in ready. Would definitely benefit from a little bit of upgrading, as you can see the drop ceiling, a little bit of love. Put your charm on this. But let's go ahead and just run through a quick example of what the cost would be to you at the asking price. Again, that's the asking price of $150,000. With FHA financing, with a full 6% assist, you're looking at roughly $5,200 out of your pocket. Your monthly payment, just over $1,000. That's lower than most rents in the city for a 1-bedroom apartment anywhere near Center City.
Yeah, if you qualify for the PHFA program, with that $6,000 forgivable loan, so interest-free loan, so it's essentially a grant to you, you may be able to get into something like this with really nothing or little out of pocket, depending on how much the seller is willing to help you out with the seller assist.
Yeah, and I do represent the seller at this time. If you're interested in getting more information, please just get in contact with me. I'm happy to talk about it. And that's it. I really want to thank you for spending the time with us here. This is my contact information. I am Ben Clark, and I am here with Steve with Center City Mortgage. So I didn't get too much into the home buying process in terms of inspections or appraisals or deposits. That's really something I want to get in one-on-one with you and be able to answer those questions. So this is my email, this is my phone number. Feel free to give me a call, send me a quick message, and we're happy to help you take the next steps.
Yeah, if you need to get pre-qualified after talking to Ben, again, 15 minutes either over the phone, or we have a secure web portal. Make it super easy for you guys to be able to get pre-qualified.
But again, really want to thank you. You did help yourself out here as we head into the busy spring market. Anything you can do to help prepare yourself to make sure when you do get ready, you're hitting the ground running. I'm glad to help in any way I can. Again, Ben Clark, Keller Williams Philly Living. Have a great day.